Have you been struggling with entries and exits when it comes to meme coin trading? It's either you are too early or too late for the party.
Yes,
Bogdanov, he did it.
il bought,
He went all in.
dump it.
What I'm about to show you is going to change the way that you trade meme coins. This 10-minute trading strategy is absolutely the very best, and it is going to give you the clarity that you deserve, especially when it comes to making entries and exits. This particular trading strategy centers around price action. Price action is going to be what you are going to be relying on, especially when you are dealing with freshly created meme coins. At this particular moment, I am assuming that you already understand how to use filters. You already have the best filters that work for your conditions and your trading style as well. So getting back to what I was saying, right? We're going to use three different time frames. We're going to be using the 15-minute time frame, the 5-minute time frame, and the 1-minute time frame as well. The reason why we are using such a very small interval is due to the fact that we are mostly going to be trading freshly created meme coins. Therefore, they do not really have the maturity, and the charts haven't really developed that long for us to use other higher time frame intervals. So if you go back to Axiom Pro, right, and let's say for example for illustration purposes, we look at the 1 hour and we just simply randomly click on any particular project. So as you can see, this particular meme coin was created about 6 hours ago. So as you can see here, you are able to select different time frame. There's the 1 hour, there's the 6 hours, there's 12 hours. But what we are going to be interested in is the 15 minutes. So basically your 15-minute is going to be your long-term time frame, and the 5 minutes is going to be the mid-term time frame. The 1 minute is going to be your short-term time frame. So the strategy that I'm using is basically the triple screen trading methodology. The reason why this is a very important trading methodology is due to the fact that it prevents you from having false signals. You are basically trading in the trend. You are not really swimming against the tide, and this is one of the reasons why you have to master it. So you can swap the time frames. You can be using 24 hours, you can be using 6 hours, you can also be using 1 hour as well. So this particular concept works on all different time frames. You just need to understand your long-term time frame, or rather your long-term window, your mid-term and the short-term. Okay, so getting back to our illustration, what you need to do is understand a few things. When it comes to your long-term time frame, the price action has to be going up. As far as your midterm time frame, it has to be going down. And then your entry, which is the smallest time frame. So as you can see, we've got different time intervals, right? Your execution time interval is going to be the smallest time frame, because this is when you want to position yourself and buy a particular meme coin. So remember, your smallest time frame is what you're going to use in order for you to execute and decide your entry. Okay, so the smallest time frame has to be up as well. So 15-minute time frame should be up, 1 minute time frame should be up as well, while the midterm time frame is going to be down. So if you follow this particular amazing strategy, you're going to be very precise with your entries and exits, because you're not going to have any false breakouts, any false entries, and you're just going to have absolute precision. So with illustrations to be shown right over here, let's flip over and go to Axiom Pro. So as you can see, this coin was created about 6 hours ago, and if we sort of enhance the charts right over here, we can see that based on our understanding of how we're supposed to time our entries, right, this particular time frame either here and there could have been the best perfect entry. However, when the coin was created, right, you just couldn't have gone with this particular data right over here, because it was very, very misleading, because you have to understand the concept of a bullish trend, a trending market towards the upside. So a trending market towards the upside has good characteristics of higher highs, okay, higher highs and higher lows. And this is one of the reasons why this particular level right over here wouldn't have been the best ideal entry, because you wanted the market structure to be absolutely bullish and show you that, okay, it has got upside momentum and you're likely to do very well. So understand basic market structure. So whenever a coin is trending like this, you're obviously getting lower lows and lower highs. Then obviously this is a downtrend. You do not want to be longing and trading in a downtrend. So for the most part, meme coins are, you can't really short meme coins. So obviously the best strategy for you is going to be longing the lows in hopes, or rather in anticipation for the price to continue going up high. So you are obviously looking forward to having a market structure which is absolutely bullish, and this is one of the reasons why you have to wait for a breakout of the previous high in order for you to look for interesting trading opportunities. And this is one of the reasons why it's not really wise for you to go for the first retracement right over here. Wait for the market to give you signs that it's going to continue going up, and this is one of the reasons why you should only take the second breakout right over here and wait for it to align with your trading ideology. So in this particular case, right, as you can see, this was the first attempt and then the second attempt right over here. So what we're going to do is we are going to position ourselves on the second retracement, and this is one of the reasons why, if we go back to our trading ideology, the 15-minute time frame should be down, because you are looking forward to like a retracement that you can take advantage of and position yourself. So 15-minute time frame should be down. So as you can see right over here, we are on the 15-minute time frame, and the price was going down on the 15-minute time frame. However, we are not panicking. The reason why we're not panicking is due to the fact that we have seen that we are creating a bullish structure as far as basic price action is concerned. So we are obviously finding support. In this particular case, the price came back to this level and it didn't break the structure. The price didn't come back down and break the previous structure. It was intact with what we look for, especially in an uptrend. And this is one of the reasons why this particular level was the optimum entry and the very best entry. If you had very good precision, you could have obviously enjoyed this particular push all the way up. So anyhow, before we get carried away with the gains you could have had, let's get back to the basics and let's get back to understanding what is going on. So the 15-minute time frame. Overall, if you take a look at this structure, the 15-minute time frame was, up, right? Isn't it? And then what you need to do is look out for when the price breaks structure on a smaller time frame and the 5 minutes is down. So as the price is developing, you're going to be flipping between time frames. In this particular case, right, I just flipped from the 15-minute time frame and I'm going to the 5-minute time frame right over here. So as you can see, this is the 15 minutes, and clearly we can see that the 15-minute has been technically down right over here, right? It has broken the structure. This is obviously an ABC, an A B C type of structure. Okay, you've got that A B C type of structure when it comes to Elliott wave, and this is coinciding with our trading philosophy, our trading ideology. The 5 minutes should be down. So what you should look forward to is, as the 5 minute is breaking down, you're going to look for a change in structure in the 1 minute. Okay, so right now we're actually on the 5 minute and the structure sort of breaks the pattern right over here, because we are going up right over here, and all of a sudden it breaks this structure and it's still in a downtrend. So what you should do now, as you see some exhaustion, and by the way, the selling exhaustion is going to be indicated by indecision. And usually, if you guys know anything about price structure, this particular candle right over here is a doji candle. So as the price really does its thing, right, if you're having like a very full-blown downtrend, the price candles are going to be like this. They're going to be very decisive. But when you have moments and situations where you have a doji candle just basically looks something like this. Okay, this simply represents indecision. And when you have a market structure which is absolutely going down and it's in a downtrend, and then all of a sudden there's indecision, and you have a doji candle like this one, and then you have followed green candle plus further hammer candles and all that good stuff, it really shows that okay, the wave is about to have a reversal, the price is about to have a reversal. So when you see such a structure on the 5-minute time frame, like a doji, especially a doji one, okay, like this one, it looks like that means something is happening. So what you need to do is you flip to a different time frame, which is going to be our smallest time frame right over here, which is the 1 minute. Okay, so when you do that, you are going to be able to observe the structure that is happening. So let's just go back. Remember, we're dealing with the 1 minute time frame, so let me just take it back a little bit. So it's right over here. Okay, this is the level that you start being alert, and you just look forward to what is happening. So as you can see, we had a downtrend, the market broke its structure, and all of a sudden you received that 5-minute doji candle, you flip to the 1 minute, and then you start observing what the price is doing. So from a 1 minute perspective, right, it's clear to see that it broke the previous market structure, and it has started producing a very blatant uptrend where it's consistently creating higher highs and lower highs right over here. So this is a higher high in comparison to that one. This is a lower high in comparison to this one. This is a further higher high in comparison to the previous one. So you've already known that okay, this is now some bullish continuation. So what you need to do is you buy when the 1 minute is actually corresponding to the bullish theory. So you buy right over here in the 1 minute. So your purchase could have been anywhere here. This is when you would have bought. Okay, you could have either bought it here and all that stuff. Then remember, in the beginning I told you that in order for you to have better precision, you have to use a VWAP. A VWAP is a volume indicator, which is obviously volume weight aggregated price. Is just like a summation of the volume in comparison to the previous candle. So please do your research on your VWAP, and also candle patterns as far as price is concerned. You guys are going to understand what I'm talking about. So as you can see right over here, right, all of a sudden on the 1 minute time frame we were below the VWAP. Then we have bullish power, the market structure changes, and all of a sudden it goes above the VWAP. So right over here, this was the absolute best entry. This one right over here and that one was the best entry because the price was above the VWAP. So when the price is trading above the VWAP, it means there's very healthy volume, there's very decent volume. If the price is trading below the VWAP, it means there is no volume. So remember, volume precedes price action. If there's high volume, probably there's a high probability that the price is going to end up doing very well. If there's a loss in volume, the price is going to end up doing very badly. So as you do your price action, you follow the Bible, 15-minute up, 5-minute down, 1 minute up. Now look forward to having the price trade above the VWAP. When you see the price is trading above the VWAP, that is going to be your entry. So theoretically speaking, right, you could have entered below 30,000. So as you can see right over here, this was 21,000 US dollars market cap, and this was 24,000 US dollars market cap. So if you theoretically bought right over here, right, guess what could have happened? You could have easily made a whole lot of money. So from 24,000 to around 429, you could have 10x your money. And this is one of the reasons why I'm saying this particular trading methodology really makes me a lot of money. If I really simplified it, and if you really get it, please give me a thumbs up and also subscribe to my YouTube channel. And I've got an alpha group. If you are interested in joining my alpha group, you need to participate and follow the course that I have in the link in the description. So one of the conditions in order for you to be part of my sniper alpha group, you have to enroll for my course, because this course is going to be like an introduction to what we're going to be doing, and you're going to be able to like easily sort of you're going to easily be able to understand what we're talking about in the alpha group. So you need to have some basic level of understanding as far as certain trading methodologies is concerned. And this is one of the reasons why everybody who wants to be part of my sniper alpha group has to take this course, because it equips you with the necessary information and knowledge that you need in order for you to have an easy time making money in our alpha group. Most of the times when people join alpha groups, right, you just don't really have the necessary level of understanding and knowledge in order for you to decipher what the people who own the groups are talking about. And this is one of the reasons why even if you join an alpha group, right, it's not really lucrative to you, because you lack certain understanding. And this is one of the reasons why I first of all started by creating a course that really programs you to understand and think in a certain way, so that you can be able to decipher and take advantage of all the information that we have in our group. So the first thing that you need to do is join my course. The link is going to be in the description. Check it out, understand it, then you can be part of our sniper alpha group. So yeah, that was really a lot, and I'm running out of breath. I haven't recorded in a very long period of time, so please bear with me. So yeah, that's all I had for you. I really hope that you understand this simple price action trading methodology, and hopefully we'll see you in the alpha group pretty soon. So remember, check out the course. Link is in the description box below. In case you've got any other suggestions, in case you're not really clear about everything that we talked about today, please drop everything in the comment section below.